This podcast is brought to you by Nuveen and Ruffer. Nuveen has provided investment excellence for 125 years. With expertise across income and alternatives, Nuveen continues to expand its capabilities while maintaining its legacy as a leading investment manager. Visit nuveen.com to learn more. Investing involves risk, loss of principal is possible. Ruffer is a London-based asset manager founded in 1994, managing over $25 billion for institutions, pension funds, charities, and individuals. They have a single investment approach that aims to deliver positive returns across the full range of market conditions. Investing involves risk, loss of principal is possible.
But interestingly, the first person to get me interested in the markets and ultimately in finance was my grandmother on my father's side of the family. And believe it or not, she was born in the very late 1800s and only went through 8th grade in terms of her education. She not only instilled the importance of education in all of us, but followed the markets every day and even lived with me for a time when I was in high school. So we started tracking the markets together and learning more and more as we spent time together, following certain companies, learning more about them. And then when I went off to college, I ended up majoring in economics along with psychology. And it was off to Wall Street from there. And the career built further as I progressed. But she was the original inspiration.
I'm Ethan Devitt, and welcome to the 50 Faces podcast, a podcast committed to revealing the richness and diversity of the world of investment by focusing on its people and their stories. I'm joined today by Stephanie Drescher, who's Chief Client and Product Development Officer at Apollo. She started her career in the Alternative Investment Group at JP Morgan and is a board member at ADT. Welcome, Stephanie. Thanks for joining me today.
Thank you so much for having me.
Well, let's start by talking a little bit about your background. Where did you grow up? What did you study? And how did you come to enter the world of finance and investing?
So I grew up in Westchester, just north of New York City. I went undergrad to Barnard, and my first role was at JP Morgan in the private bank. But interestingly, the first person to get me interested in the markets and ultimately in finance was my grandmother on my father's side of the family. And believe it or not, she was born in the very late 1800s and only went through 8th grade in terms of her education. She not only instilled the importance of education in all of us, but followed the markets every day and even lived with me for a time when I was in high school. So we started tracking the markets together and learning more and more as we spent time together, following certain companies, learning more about them. And then when I went off to college, I ended up majoring in economics along with psychology. And it was off to Wall Street from there. And the career built further as I progressed. But she was the original inspiration.
Well, what a wonderful story. And funnily enough, grandmothers probably feature just as often as grandfathers in this question. And it's interesting because that might not be where the stereotype would lead us. But just before we move on, I've given her when she was born and the fact that she probably was living through some pretty rough times in markets, probably witnessed depression, inflation. Did she sort of teach you any kind of guiding principles, any approach to risk? What was her philosophy? What was her psychology of money?
That's a great question. It certainly presented itself in our work ethic. And my father, who just turned 85, continues to work every day. So he is another source of inspiration, although I don't know at 85 if I still want to work as hard as he does every day, but it's a passion for him. And he taught me a ton, but I think that's the core of it. And then clearly the focus on investing, on saving, making sure that we kind of built portfolios over time, even though she did not have the professional training to do it. There was a focus on that component of investing for the long term.
I love it. And then, so you went into JP Morgan right after undergrad, it sounds like. Were there any surprises or twists or turns along that trajectory? And How did you know this was kind of a keeper career for you?
So I'll admit when I started in the JP Morgan private bank and in the alternatives group in particular, I did not foresee close to 30 years later that it would be so relevant to the role that I hold today. But it was an amazing training ground. So I started at JP Morgan first through a rotational program where I saw many parts of the firm, including time in Geneva, which was an amazing opportunity to plant my flag in Europe, different time zone, appreciate cultural differences, and was a great learning experience. I then came back to New York and ultimately landed in the alternatives team within the private bank when it was only a handful of people. Private equity, hedge funds, real estate were not front page news. And it was very much about education and what those opportunities and investments, the role they could play in a client's portfolio. So learning the basics in that role was critical to the trajectory of my career because I was early days into alternatives, met Apollo along the way, and joined the firm in 2004. I'll admit, I naively questioned at the time, will it be dynamic enough? Because I was seeing so many different strategies throughout the year at JP Morgan. And of course, it's been nonstop ever since I joined. And I think for me, there were absolutely twists and turns within my career, mentors and sponsors who propelled me, and some challenging relationships along the way. And you learn from each and every experience. And as I tell my children today, it's all about enjoying the ride, making sure that you're learning from each chapter and kind of being resilient. Because there are times where we all go through challenges in one way or another, and having faith in yourself that you're going to be better for it is a key part of the journey.
And it's so interesting, just to bring it back to your grandmother, what I've heard is that having this kind of family narrative of resilience, survival, long-termism is actually very subconsciously important because, even when you're facing a scenario that maybe your grandmother didn't face because she wasn't in the same professional setting, say, knowing you can get through it because your family has done it before is just a really kind of a subconscious reassurance there around that. I think I agree with you in terms of starting early in alternatives is somewhat rare. We're all talking about it now. It's one of those things that can be quite daunting. The more you progress into your career, it kind of has this veneer of complexity, and getting early entree into it, even though that area has itself evolved a lot, is, I think, a great opportunity to be very fluent in it later. So we can talk a little bit about how they get used. So now at Apollo, your title is Chief Client and Product Development Officer. First of all, can you just kind of give us a sense as to who the clients would be? You spoke about starting in private wealth. Are you now dealing with institutional and private wealth clients, or just one segment?
That's a great question. So when I first joined Apollo back in 2004, really up until just a few years ago, the primary focus was the institutional client. Sovereign wealth funds, pension funds, financial institutions in the institutional realm, and a very limited number of relationships that we had with large family offices or certain private banks. And as of 3 years ago, when Mark Rowan became CEO, that was the lion's share of the time and attention within the client and product function. When Mark became CEO, we recognized that there was an opportunity to complement the mature and very meaningful institutional relationships that we have with global wealth. And we define that as relationships with wires, private banks, independent channels, the RIA, independent broker-dealer, and then family offices on a select basis. So over the last 2-3 years, with that as a strategic commitment from the firm, I have very much launched my time and energy into the creation of our global wealth platform and business. And that has gone from one person when we first started to now about 130 dedicated to that segment of the business, because we recognized that it was the right point for us as a firm, given our product mix, our educational tools that we could offer the market, our kind of investment capability itself, kind of our underlying strategies, we recognized that we could take the institutional quality product that up until that point was very much focused on the institutional community and offer access points to the wealth community, to advisors, and then ultimately their clients, individuals, and families. So the arc of my career started in private banking with families on the wealth side. Then through my earlier time at Apollo, very much focus on the institutional buyers. And now back to where I started in building out solutions for individuals and families.
Well, I think just that growth trajectory you mentioned, even in terms of the size of your team, is reflective of the dynamism and energy and excitement within this whole segment, given the growth, and particularly around alternative products and platforms. And I'd love to know, since obviously you probably see a very different environment from the beginning of your career to now, how do you find that clients' needs are evolving, and maybe how that relates even to alternatives as well?
Look, I think as the client base navigated 2022 and the reality of the public markets, it became very stark that the traditional 60-40 model was not going to meet their long-term needs. And it brought, I think, to the forefront the inherent underlying concerns in the public markets, equity and fixed income in different ways, around correlation, lack of diversification, volatility, and clearly public markets are critical in any portfolio as we look forward. But the role of private market opportunities, I think, is ever more important in how investors really of any type end up achieving their long-term objectives. And when we boil down the goals of really all of our client segments, in one form or another, it's saving for retirement and or building the wealth for future generations. And that's true whether it's a pensioner or a family member. So we want to be the trusted steward of that capital. And as we think about portfolio needs and objectives, one critical change I've seen in the market is the importance of using private market exposure as a tool in an overall portfolio to dampen that volatility, to create more diversification, to offset some of that correlation, because it's very real in the marketplace today. And if we think in particular kind of about the public markets, and even looking back at 2023, for example, I'm sure you've seen the stats as well, about 90% of the performance came from roughly 7 stocks. That's pretty meaningful concentration. Yet in contrast, when you look at the number of companies that exist globally, 90% of those companies are private. So investors deserve to have access to the private markets. And there are similar challenges on the fixed income side, given the liquidity inherent in the underlying market and overall correlation that we see. So I do think the 60-40 model is evolving at a minimum to include private markets exposure in both the 60 and the 40, and utilize to help navigate market opportunities.
And it's so interesting because since you've seen the institutional model and the private wealth, I think institutional models tend to be a lot more benchmark and peer group driven, or these models, at least they're monitoring the portfolio, whereas clearly in the private wealth, capital preservation, not losing, is a little bit more at the forefront. So in a way, that volatility mitigant, even more important. Do you see the role of alternatives growing going forward?
I do. We see the definition of alternatives also changing, where alternatives historically was thought of as riskier and a narrow portion of one's overall portfolio. In today's world, our definition of alternatives is simply an alternative to a public stock or bond. And when you think of that alternative as something that could generate excess return, whether it is a AA piece of investment grade paper all the way through to your classic private equity holding, that's a very wide definition of how one could use private exposure and alternative in their portfolio. So in that world, why not have private markets as 50% of your holdings? Because we recognize that public markets, and we saw this in 22, can be both risky and safe depending on how you allocate. And private markets similarly, when you identify managers, can be risky or safe. So we see them as a great complement. And ultimately, I believe advisors, individuals, and institutions will continue to grow in exposure.
And now we bring you a message from one of our sponsors of this series, Nuveen. Nuveen has provided investment excellence for 125 years. A lot has changed, but one thing remains constant. Including different types of durable income in portfolios can help investors meet their goals. With expertise across income and alternatives, Nuveen continues to expand its capabilities while maintaining its legacy as a leading investment manager. Visit nuveen.com to learn more. Investing involves risk, loss of principal as possible. And now, back to the show. Let's talk about the tech platforms. I mentioned earlier this burgeoning tech solutions for delivery and parceling and maybe tokenization of some of the holdings. How do you see them and Apollo's, I suppose, participation in them as being key to the delivery of some of these solutions?
As an industry, our demand for alternatives has outpaced the technology and the infrastructure. There's certainly many providers out there that work hard to provide more efficient access. But I think this is an area that we will only see great acceleration of solutions in the coming years. I think we'll be in a very different place. I hope in 3 years, even greater confidence in 5 years. But I think we'll start to see the enhancement of the technology and the access points, in part through product innovation and in part through the actual services and infrastructure design. So it's an area that we as a firm have certainly focused on because we recognize that it will not only help us as a firm, but we are committed to doing our part in helping the overall industry.
And tied to that, so large diversified firm like Apollo, there are a few of you out there, you're certainly grown tremendously over recent years. What role do you see these kind of firms as playing in the industry, not just in alternatives, but just as, are they going to be bank substitutes, much more direct client work?
I think ultimately we're certainly committed as a firm to think agnostically across channels. And our key focus is to source opportunities that ultimately deliver excess return per unit of risk, create portfolios of solutions that will help clients of all types meet the goals that we spoke about earlier, and then provide access points that meet the needs of the respective buyer. So that could mean one thing for an institution in a certain jurisdiction, and another for an intermediary or a client sitting anywhere around the world. So for us, the sourcing and the portfolio composition is the same. It's kind of that institutional quality. But I think the industry has evolved, certainly we have, to ensure that that specific access point, once the client has defined the strategy that they're looking to have exposure to, the vehicle can then adapt to the needs of that particular channel/client. So in the instance of wealth, we certainly see that there's a need to address currency, tax regimes, regulatory environments. And that type of innovation is then applied in terms of that particular vehicle or way of accessing the opportunity.
I'd love to move to some reflections now, because one of the first things I want to ask is about how you moved through your career and whether that was intentional. You mentioned some mentors and sponsors, but how did you move into these leadership roles and develop your career?
So I have had some pretty amazing mentors throughout my career. While at JP Morgan, I saw Mary Erdos through her trajectory. Prior to Mary, there was a woman who led the private bank named Mel, Maria Elena Lagavestino. And she mentioned something early on, very early in my career, that has stuck with me. She mentioned, and it was probably related to kind of Women's International Month. She said, as we rise in our careers, ensure that we lift. And that has stuck with me in multiple ways. It certainly guides me in terms of how I lead and manage people generally. It certainly has inspired me as it relates to our women's initiatives, which I have co-founded at the firm now 7 years ago. And beyond that, it also impacts how I get involved in the community. So I have sat on a number of boards that are also designed to help women and those that need kind of that extra hand to make sure that they find opportunities. So creating those opportunities for others, as I have been the beneficiary of greater leadership roles, has been super important to me. And then I've also been extremely fortunate here at Apollo to have sponsors and mentors that similarly have had the confidence to give me those growth opportunities and importantly, ensure that, and this is advice I would certainly give to others, that I take that risk and have the confidence that I'll be able to achieve what the job requires. And thankfully, in each instance, it's that combination, right, of having someone have that faith in you, and then importantly, have the confidence to go fight, win, and hire an amazing team to help achieve those goals.
And you also do the work and deliver. I think that grandmother's work ethic, dad's work ethic, family work ethic, it took us a long time to set up this call because you were doing the work and delivering. So I think that's kind of a fundamental. But I'm sure you said even within a career like that, there were setbacks and challenges. Were there any in particular that you learned lessons from, any wisdom that came from them?
Look, there have definitely been times where in a career that there are moments where certainly as leaders, we can foster a really strong culture. And I'm a big believer in the famous quote that culture eats strategy for breakfast. And not because strategy doesn't matter, it's critical, but it drives the strategy when you get culture right. And so I'm a big believer in that. Throughout my career, I've certainly experienced cultures that were not necessarily designed as well to meet the strategy, or even probably more exactly certain kind of teams that did not work as well together. And I think, a lesson learned is to make sure to make changes quickly if those situations arise where it feels like you're not going to get the outcome that will have the greatest impact. And so if you see a change that needs to occur, you don't typically regret doing it sooner versus later. But when you can get that culture right from the beginning, then that's extremely powerful. But recognizing that change often is required and just doing it as quickly as you can.
Well, excellent lessons there. And just a final question. You've already laced this conversation with a lot of words of wisdom and takeaways. Would you say there's any one creed or motto you live by, or any advice for your younger self, anything you wish you had known coming out of Barnard that you know now?
I do think that expression of enjoy the ride is an important one. I think it's something that as we grow with experience, we allow ourselves to kind of not sweat the small stuff and have that bigger perspective, which, when you're just starting out, it's sometimes harder to have. But in any career, and, thankfully, I've been fortunate to kind of have many pretty amazing opportunities. And as we say at Apollo, we get to do this. We don't have to do this. But enjoying the journey and the ride to get there is super important. And then certainly advice I'd give more generally to those just starting out is to really believe in yourself and have that feeling of being able to achieve just about anything you put your mind to, because those opportunities will come. And in those moments, you want to go for it. And even if it feels like you're taking some risk, odds are it will work out. And if it doesn't, you'll learn from that too. And each thing allows us, I think, to just become our best selves.
Well, one bonus question, because this has just been a very inspiring conversation. It just dawned on me that Barnard is a women's college and you're such a champion for women. Do you think any of that was formed or at least solidified or enhanced by going to a women's college?
Absolutely. I think it played certainly a part in just how I developed my thinking early days. And there were many classes I took at Columbia and had that kind of co-ed experience as well. But there was something about the all women's classroom at that stage in my life that I do think built a great sense of confidence. And when I've been in rooms of predominantly men throughout my career, I have felt very comfortable having a voice around that table. And I credit at least part of that to the Barnard education and just the comfort I had in those classrooms early on.
Well, Stephanie, thank you so much for coming here. I've said it already, but you are a huge champion for women, and only in Apollo, but in the industry. And thanks to some of your LinkedIn posts for all of us watching, even from those outside the industry too. And I'd say that what you really do instill, and it's a new concept of it's this kind of this quiet confidence of belonging. You belong in this industry, you instill that, and by belonging and owning your role so convincingly, I think whether subconsciously or not, the rest of us kind of pick up on that. And I think we'll gain that confidence too. So thank you so much for coming here and sharing your insights with us.
Thank you for having me and for all that you do.
I'm Aoife Devitt. Thank you for listening to the 50 Faces podcast. If you liked what you heard and would like to tune in to hear more inspiring investors and their personal journeys, please subscribe on Apple Podcasts or wherever you get your podcasts. This podcast is for informational purposes only and should not be construed as investment advice, and all views are personal and should not be attributed to the organizations and affiliations of the host or any guest.